Hey, what is going on, everyone? My name is Matt, and I'm joined today with my partner, Dean. We're going to be going over how you can actually manage cash flow using whole life insurance. This is something that a lot of people are interested in right now. You might have heard of a concept called infinite banking. Whole life insurance is actually the product behind the whole concept. So we like taking a deeper dive and explaining to business owners and specializing in corporate-owned life insurance and how you guys could actually use this in your business today. So if you guys do like this video, make sure to subscribe, show us some love, drop a like, and yeah, let's get right into the video.
I guess probably we need to start from the beginning, and I don't know what level of knowledge people have coming into this channel or not, but I think a lot of times when people think of life insurance, they unfortunately think of it as an expense for their business, right?
Yeah.
They think of it like another bill that they have to pay every month.
Yeah.
Our approach is a little bit different when we're talking with business owners. We usually look at their existing portfolio, and what you generally find, anybody that's done good planning is going to have a certain amount of their portfolio in equities in the risky side of things, and they're going to have a certain amount of their portfolio in fixed income, cash, and cash-like instruments. And what we do is we work with business owners to show them and then help them actually implement this, but to show them what their business would look like if instead of all of that fixed income being in cash and GICs and, really low yield things in mutual funds like cash management accounts and bonds and stuff like that, what it would look like in cash value life insurance instead. So it's really this idea of cash value life insurance as an asset on your balance sheet that you're feeding by moving over other assets. And why would you want to do that?
Yeah.
Well, cash value life insurance is in my opinion, and I think it's pretty tough to argue that it's not, the safest asset on the planet, right? When dividends are declared by the insurance company, they're vested immediately. So as that cash value grows, it's guaranteed not to go down, right? And so that's a really important thing for a business owner who takes a lot of risk already. So now you've got this pool of assets that you've built up, a storehouse of capital, if you will, that you can then leverage against. And that's really where the power of this thing comes in for a business owner. Because if you've got all these other fixed income products, like your money in a bank account or a GIC, the minute you access it, what happens to it? Gone.
Down. Yeah.
Yeah. Okay. You've spent it. That's the thing about money, is once you spend it, it's gone.
Yeah.
Whereas a storehouse of capital, you can utilize that and spend, buy things without actually collapsing the compounding machine that you've built here. So that lays the groundwork, I think, just in case there's people coming in and watching this that aren't familiar with the concept of whole life insurance in a business, right?
Yeah. So basically what we're saying is there's a lot of living benefits that's detached from obviously you still get the death benefit, but actually whole life insurance, I think, is the best for living benefits. Out of any form of life insurance, I think whole life has the most living benefits.
How does having this thing inside of the business help me with cash flow?
I think one of the most important things is having access to that cash value, knowing that you could take out a policy loan. Let's say if you need to pay employees or you need to pay a business expense, maybe you're in a recession and it's harder to get loans during a certain period. You're able to actually access that cash value, which is probably I don't think you can do that with anything else, and leverage that cash value to essentially get a loan from the insurance company due to the contractual guarantees of the policy. It's not like you can go to a bank and guarantee yourself a loan. With a whole life policy, you can guarantee yourself you would have access to the contractual guarantees.
First of all, when we're talking about cash flow, I think every business owner understands that the flow of cash into a business is going to be cyclical. And it might be just through different times of the day, through different days of the week, months of the year, seasons of the year, year over year, things change. Right. And if you're fortunate enough to have a business where your cash flow is pretty steady all the time, then this one aspect of the five is maybe less important to you. But I would say that for most businesses, managing their cash flow is a big deal. Right. And so
especially for small businesses, I think.
Especially for small business, yeah, because they probably have that less consistent cash flow, right? And it's boom and bust. And so it's always this balance of, when the business is doing really well, you want to be able to invest some of those, profits from that, the increased cash flow in those periods back into your business. But then the challenge is if you do too much of that, then you hit these periods where cash flow is low, and then maybe you can't pay some of your expenses, right? Including employees and, your vendors and all that sort of stuff. So if you have a storehouse of capital, right, if you've got cash value inside of a whole life insurance policy, then when you have those boom periods where cash flow is great, you can spend that knowing that if there is a bust cycle that you need to get through, you have access to capital. And to your point, it's not just going hat in hand to a bank and saying, hey, we're having a bit of a tough time. Can you give me a bridge loan? Right? And you could do that. And in fact, instead of going hat in hand, I actually like this analogy. Instead of going hat in hand, you go insurance policy in hand.
Yeah.
And banks understand these policies very well. They know that they're guaranteed to not lose their value. So as far as collateral goes, I can't think of any other things that have better collateral than this insurance policy. It is.
They are tier one assets. They are tier one assets.
It's a tier one asset, exactly. And the bank recognizes that. They will lend you money off of it, all things being equal. So you still have to qualify for it. And if the bank decides that maybe this ebb in your cash flow has gone on for too long, and they don't trust that you're going to, and the business is going to come back, it, but the bank doesn't. Well, then you've still got this other ability to access it outside of a bank, which is, as you said, a policy loan directly from the insurance company. And because it's contractually guaranteed, you can't be turned down for that. Now, just to be clear, in that same situation, if you just had cash sitting in some other accounts, you could have done the same thing.
Yeah.
Right? Oh, the bank won't lend me money. Well, I don't. In fact, maybe you think, well, I don't need to borrow any money at all.
Yeah.
I can just access this cash. I just redeem my GIC, and maybe I got to pay a penalty because it was a 2-year GIC and I'm taking it out halfway through. Right? But the point is, you could have accessed that. Right? But then what happens?
You see, you're interrupting your compounding. It's like, right? So what happens when you spend cash? Well, it depletes. You lose what it could have been. You lose money due to opportunity cost when you deplete that cash. With why we say take out a policy loan, it's because we keep our money compounding our cash value, so it accumulates cash and compounds, right? So we're not touching it. So it's uninterrupted.
So
and then we just take out a policy loan on this side of the cash value, and then we're able to spend out of this using the insurance company's money to go pay for those expenses.
Is normally, if you did it just out of your cash, you would have interrupted the compounding. And then, of course, over time, you would be feeding that back into your bank account.
Yeah. And the thing is,
up again. So now, instead, you just feed that back into the insurance policy.
Exactly.
Right? But you don't have to build it back up again because it was growing at its full amount the entire time. It's probably bigger now than it was when you started borrowing against it.
Because it was growing. So while that period of time when obviously you had to pay interest on these policy loans, but your money was still growing in this account. So actually the next time you take out a policy loan, you have access to more capital than what you started with. So I always thought that was really interesting. And I also wanted to touch on one other thing before we move on. Even in when your business is doing well, you still have access to policy loans. You still could bring it to the bank. You actually probably have more access. You can collateralize your policy better with the bank when everything's going well. So it makes your highs higher and your lows higher. What asset does that, right? Like it makes everything just more fluent. And it's kind of like the grease to your business. It makes everything be able to move and function better. And I think that's why, McDonald's did so well. Like he actually leveraged whole life insurance. Disney, he was able to get it going because he had access to funds of his cash value.
Disney World would not exist if it wasn't for the foresight of Walt Disney's parents. I believe it was his parents, or he put that on himself. I don't know the exact story, but I know that the banks would not lend him money to build this ridiculous park based on a bunch of cartoons. They just thought he was insane.
Yeah.
Right. But he believed in it so strongly and he saw that vision so clearly. He borrowed against the cash value of his policy. And now, millions of, and again, maybe you're not a fan of Disney. I don't know. But I think what kid doesn't enjoy the magic of that place, right? So
we'll definitely have to bring more videos about like all these specific topics. So if you guys are interested in that, make sure to subscribe for more, like, comment. And, if you have any questions, we'll leave our Calendly that you can book us on an individual basis. And we love just to educate everyone fully. And there's no obligations. We're not going to try to sell you on anything. We're really just going to try to provide as much value, educate you as much as possible, so then you can make the decision for yourself. So yeah, make sure to really check out what we have in the description. And yeah, have a nice day. Peace.